Avoid these mistakes. Here's what not to do when you're applying for a mortgage. Hey, what's going on, everybody? It's Jeff Javarthan, Jeff the Mortgage Pro. Thanks so much for joining me today. I love talking about this topic. This is something that seems like it always comes up in a transaction. It usually happens to me once a year, and it always makes me go, oh man, I wish I would have reminded them to do that. So this video is helping me because I'm going to be able to send people this video once we get into contract and when we're buying a home or refinancing a home, just so you don't do any of these common things. So here's what not to do when you are applying for a mortgage loan or you're going through the mortgage process, okay? Number one, the first thing is don't neglect your credit score. If you are missing payments on things or you have high balances as in relation to your credit limits, those are all things that are going to affect your credit score going forward. And a higher interest rate could cost you like hundreds of thousands of dollars over the life of your loan. Let's say tens of thousands of dollars over the life of your loan. So it could definitely have an effect on you if you ignore your credit score or neglect that credit score. Okay. Number two, mistake that sometimes people happen to do, changing jobs. So I wouldn't say that like you can't change jobs, but for the most part, try not to change jobs during the mortgage application process. We prefer that you would have stable employment, and a sudden change may raise concerns about your ability to repay the loan. Now, if you're going from a job that's going to improve your situation from one that's not, it's going to better your situation, then absolutely change jobs. Just give us a heads up of what you're going to do. Usually we'll need some sort of an offer letter and oftentimes your first pay stub at your new job to be able to help you qualify for that new loan. So it can be something that's not a big issue, but just let us know if you're going to do that. We would prefer you don't change jobs, but if you do have to do it, you got to do what you got to do, right? Number three, don't make any large purchases. Okay. So avoid making any significant purchase, such as a new car. This is a big one. Any expensive furniture for your future home that you're going to be living in before applying for a mortgage. And what I would say is that if you're going to make these expensive purchases, don't put them on credit. If you're going to use cash for it, go ahead and do that. That's not a big deal if you're using the money for those types of things. But if you're going to apply for credit, that could crank up your monthly payment on your credit card, which could affect your debt to income ratio. And you can see where that might be an issue when you're trying to qualify for a mortgage, because we definitely monitor that during the application and the actual loan process. Okay, so don't make any large purchases if you don't have to. Number four, skipping the pre-approval process. This is a big one. A lot of times when we get buyers come to us, they're super antsy and they're super ready to get going, and we'll do the best we can to get you pre-approved as quickly as possible. But don't skip this process, because if you just go out and start looking at homes and you end up in a property that you're not qualified for and you're in contract, like that might be a bad deal. That's going to be hard to make up for lost time because we don't have any of your documentation. We don't have an application. Can it be done? Absolutely. But at the same time, it's just much better and much easier process for you as a borrower if you would just take the time to get pre-approved. Make sure you have all your documentation lined up. Make sure you have a loan application in. Make sure that an underwriter has looked at your file at the very least. An automated underwriting system has looked at your file to make sure that there's no red flags in there that we can't help you qualify for. Okay, so don't skip the pre-approval process, please. Incomplete documentation. This is another thing. Try to make sure that you have as much documentation as you possibly can. Ensure that all of your financial documents is complete and accurate. Remember, if we're asking for things, we want PDF copies of them. We also want all pages of things. So all pages of your bank statements, all pages of your pay stubs, all pages of your federal tax returns, if that's something we're asking for. Make sure that all of that information is in there, even if the page is blank, because a lender's always going to question, like if you have 7 of 8 pages, but the 8th page is not there because you thought it was blank, but a lender's going to want to see that. So make sure that you have your completed documentation and not incomplete documentation in order for us to help you qualify for a mortgage. Okay. Number 6, don't ignore the additional costs when you're buying a house. Okay. Don't forget there's things like property taxes, homeowners insurance, HOA fees. Failing to consider these can result in a financial strain when you're purchasing your home. So there's a lot more things that go into just the principal and interest payment on your mortgage. Again, you can have things like property taxes, homeowners insurance. You could have hazard insurance. If you're buying in a mountainous or a high fire area, you're going to have, different types of insurance, and that could be even more costly. So don't ignore those types of things when you're trying to buy a house, because the last thing we want you to do is be house rich and cash poor. And it's really hard for you to make the monthly payment every month. Okay. Number 7, Don't max out your credit cards. This is going to affect your credit score, and it's going to, look not that great. So remember, we have to count all that stuff against you in your debt to income ratio when we're helping you qualify for a home. So if you're maxing out your credit cards and your monthly payments are high, that's going to affect the amount that you can qualify for. It's probably going to reduce that by a good amount. So try not to max out your credit cards. If you have unstable finances, this is another thing. We want to make sure that you have some stability. So avoid moving money around between your different accounts. A lot of people have savings accounts over here and checking accounts over here and investment accounts over here. That's totally fine. We're not saying that. What we're saying is let's just see where the money is. Don't move money from one account to the other without first running it by me as a lender, or, our team as a lender, or your lender. Don't ever do that, because you're going to have to paper trail that stuff, which makes it more work for you. So just leave the money where it is for right now, and then we'll instruct you on how to move that money around going forward. Okay. Number 9, don't ignore the interest rates, guys. This is something that, I've seen happen, especially over the last couple of years as interest rates were going up. And the reason being is that it seems like, we would talk to people and then we would try to keep in touch with them and they would lose touch, but interest rates are going up. But, 6 months later, when they were ready to try to buy a house, their qualification had changed because the interest rates had gone up so much that they couldn't qualify for that same purchase price anymore. So don't ignore the interest rates. Make sure you understand what's going on in the market. Do they drastically go up overnight? No, they don't. They go up slowly in the relative scheme of things. And they also come down slowly too. So just keep an eye on it. It's not something you need to watch every single day, but at least on a weekly or a semi-monthly basis, make sure you're checking on to see what the interest rates are doing, so you have an idea of how that's going to affect your payment. Hopefully they're going down, and that means that you're going to get a lower payment, right? And lastly, don't neglect the fine print. Read and understand all the terms and conditions of your mortgage agreement. When you're going to sign these things at the title and escrow company, hopefully you'll get a copy of this before you actually close, so you can read through it on your own time, because it's a lot of stuff. So sometimes there's 90, 100, 150 pages in these documents that you have to sign when you're signing off on your loan. So don't neglecting that stuff. This could lead to any unexpected fees or obligations, causing financial stress in the long run. We always do the best we can to explain all this to you. But ultimately, remember, you're the one that's responsible for all of this stuff and making sure that you understand it, because that's what you're doing when you're signing it. But just don't ignore it. Make sure that you read it and at least have an idea of what it all means. Okay. All right. I hope this video helps out a lot of you guys out there. If you liked my videos, make sure you hit the like button. And then if you want to subscribe, go ahead and hit that little bell down below. I'm going to put my calendar link down below. So if you have a chance and you want to reach out to me and you're thinking about buying a house, I'd love to be the one that helps you finance that property. Okay. Thanks so much for watching, guys. I'll see you on the next show. Have a good one. Bye.